Well, g'day there, everybody, right around the world. You are here with James on behalf of Pivot Point Trading. This is going to be a relatively short video. However, it is also especially pertinent to, I guess, the current dynamic underpinning just what's happening, for instance, on the Dow Jones Industrial Average relative to that of the NASDAQ. Really, the market discussion at the moment is going to be about some of the differences and short-term divergences that we're seeing in terms of follow-through, especially that of the Industrial Average compared against that of the NASDAQ. So what I'll do for you now is just break down very quickly what has transpired on the industrial average over the past week's worth of trading. If I go to the weekly candlestick, first of all, this is a long day Morobozu candle. You can see that we have more or less a shaved bottom, and we closed at the highs of the weekly movement. In fact, we closed very strongly into the week's end on Friday. We closed up 456 points, another long day Morobozu candlestick. We overtook, of course, the gains which we established 3 weeks ago. And again, it looks as though we are getting into some form of a little bit of a blow off top. Now, that blow off top at the moment, it doesn't necessarily mean the macro trend is going to run its course. But in terms of this wave of buying that we've seen since the breakout of these lower areas down here, say, for instance, around 22,000, it looks as though, again, we're getting close towards the end of this bullish pop. Now, the reason I say this is because this ADX reading is up here at 73.8. If I go back out and allow as much data on my screen as you can possibly see, there's only one other time since 2011 over here where we've seen the ADX up this high, and that was back towards November 2016, where we saw, of course, the buyers come back in after the Trump presidency. Now, this registered and we peaked out here at 85. There have been other cases, of course, historical, where we go back and look, where we see the markets generally slow down around that 70 reading. I did this in the pro class over the weekend, and we came to the realization that the last time the ADX registered at this level outside, of course, November 2016 was all the way back in 2008 during the midst of the '08 capitulation, the meltdown over here. So I mean, we've had two instances since 2008 where, of course, the ADX on the Dow Jones, for instance, is as elevated as it currently is. Now, what makes this even more interesting is that if we just take into consideration the RSI, the Relative Strength Index, another index showing, of course, just how overbought a market or even an individual stock is, we are registering at a 64-year high. So I mean, there hasn't been a time on the Dow Jones Industrial Average where we've seen the general nature of buying pressure, so to speak, register as high as it is until we start looking back almost 65 years. Again, when we see these outliers or these types of anomalies in financial markets, we really need to pay close attention to that of price structure and what's happening on the daily composition of candlesticks. Now, if I take into consideration the candlesticks, I mean, they're all very bullish. I mean, if you go back over the past 5 days worth of trading, they're all white, they're all long day sort of bullish Morobozu candlesticks. But what is interesting is this open window or open gap, which established itself between Tuesday and Wednesday. We tried to fill it on Thursday. We didn't fill it. We are left with still a temporary opening window or open window. And again, this is a suggestion at this particular point as to whether this is a sort of a continuation gap, which it appears to be right now at the current juncture, or whether or not, of course, if we do start filling not only this gap here, but also the gap between Thursday and Friday, and whether or not it comes to that of an exhaustion gap. The exhaustion gap, it doesn't have to be the macro trend, so the big upward bullish trend that we've been in since the lows in 2009. But again, it can correlate very nicely and assimilate very nicely into the end of these sort of intermediate movements which we see in price. Generally, what happens is when the ADX gets this elevated and when it starts to turn down, that signifies the end of the trend. Now, it was looking to do so during the week. This was pre some of these gaps we saw towards the end of the second half. But if we take into consideration that of the S&P, you can see that we have turned down definitively. And this is also coinciding with the gap which we saw on Friday. So we're seeing a little bit of mixed signals starting to sort of form with that of the S&P 500. This can also turn back up, but generally when we push up into these elevated levels, of course, at the moment we're registering just shy of 60. It's the first warning signal, so to speak, that the market direction could be beginning to slow. And all this necessarily means is that as that ADX gets higher and higher and higher, when it does turn down, the market itself, if it's in a bullish trend, it generally short-term consolidates sideways. Very similar to what we saw in the month of August, and also very similar to what we saw in the month of June and also July. So, I mean, if you just extend this over here, this was the last time the ADX turned down. And what happened was we moved into a consolidation collectively across these markets. Now, if I take this one step further and talk about the NASDAQ, there's a piece of, I guess, technical or a concept of technical analysis that is called Fibonacci expansion levels. Okay, and what these are is that these are sort of extrapolated measures of past movements in an index or even an individual share. And then we use, of course, the Fibonacci ratios to make projections as to where that next upper resistance area is. It really helps us when, say, for instance, a market is pushing up to new all-time highs, or even an individual stock breaks above its all-time high, its last point of resistance. And we're asking ourselves, well, how far can this individual stock or even a market run to until we start to see some of these Fibonacci ratios, potentially hinder or slow the market move. What makes them even more powerful is when you measure multiple ranges of a past bullish move and you take into consideration different measures or different lengths, different ranges, and you start to see confluence of Fibonacci ratios. Confluence just simply means is that they start to line up very, very nicely at a certain point on a chart. And that point that I've gone through with my own analysis, and this is something that I've had on my screens for, months right now, has been 6,648. And it's quite interesting because when you take into consideration the movement which has happened on the Dow Jones Industrial Average, again closing up 456 points, the composition of the weekly candlestick being a long day Morobozu candlestick, a very strong bullish continuation type of signal. Again, if I do this on the S&P 500, if I can bring up the right template, I push one and I push the W key. Again, a very similar candlestick, but it isn't a perfect Morobozu candlestick. We still have, of course, this lower wick over the past 5 days worth of trading. But when I bring up the NASDAQ, you can see it's different. It isn't a long day body. It's not a white, long, real weekly body. It is what we call a spinning top type of candle. And it takes the formation very similar to that of a hangman or even what we call a dragonfly doji. Now, both the hangman and the dragonfly doji are very weak sort of reversal signals. However, the actual construction of the candlestick is both bullish and bearish. The reason why it is considered somewhat bullish is because we have that long lower wick. And again, that is indicating buying pressure. So if you go back and you see these lower wicks, especially during consolidations, it's a really good forward-looking sort of indication that the buyers are starting to show up. They're establishing that macro support and they are beginning, of course, to build, and we should see prices rise. When you get to the top in a potential resistance area as laser focused, and molecular, so to speak, as a trigger or valuation or a target is 6,648, and you start to see these signals, you should start taking notice. And again, I've been speaking about this even on Thursday when the markets were pushing down or pulling back very briefly on Thursday. I still said that, look, if we see the pullback, we could see a bounce more or less the following day and push on back up a little bit higher back up into this figure. So we closed at 6,629. We are very close, of course. We're within 20 points of reaching this target. So I've just recorded Pro over the weekend. I've shared my thoughts with the majority of people in that class. And we're pretty much saying to ourselves, look, although we can obviously establish that, look, the Dow and the S&P are pretty much or very much so overheated, overextended. They are exceptionally sort of strong and bullish. And sentiment is skewed, so to speak, in terms of greed fear index. I mean, we're registering above 95. All of these sort of massively sort of contrarian indicators that we can look at in terms of understanding, engaging public sentiment, and then of course, trying to disconnect emotionally and think about what's what could potentially happen with some of these anomalies which we're registering, especially with the RSI on the Dow Jones Industrial Average, for instance. We start coming to the conclusion that the Nasdaq, so to speak, is the one market of the three that gives us a really reliable target, a laser focused target. And when we hit this level, I think we will hit it this week, we need to pay attention to what happens, because if we start to see reactions take place in the NASDAQ, in the Dow, in the S&P 500, it may mean something bigger is on the horizon. I just wanted to point this out to you because when we start breaking down, I guess, what is housed obviously within tech, when we start looking at the big tech players, generally the market leaders, they're not really leading the market, are they? I mean, I'll just put the question mark, I'll pose the question to you, but again, it's self-evident. If you just look at this chart and you ask yourself, is Apple making new 52-week highs? No, it's not. I mean, it recently did. If we go back to September 2017, the beginning of the month, yes, we registered the all-time high, but at the moment, we've gapped. And I mean, I put a video out one week. You go back and have a look at the backlog of videos on this YouTube channel, and we're talking about potentially the bear flag and how we've got some doji candlestick, some high wave spinning tops. I mean, it was looking like a slowdown around this 156 pivot, and how I was saying be cautious on Apple. Well, if you fast forward into the first half of the week, a lot of people were getting very excited about Apple, but then here comes Thursday and we just gapped in the opposite direction. We're pretty much right back at that smack bang area, which I was speaking about 1 week ago. So tech's looking, it's not looking the strongest, if I could just simply say it how it is. I mean, we've got a gap in the opposite direction. This looks like some form of a reversal gap, so to speak. And I mean, these are conflicting signals which are flying in the face of the NASDAQ and even the Dow, for instance, at the moment. Now, Apple might not be the best case scenario. We'll see what happens, but it's interesting to note that this is a gap in the opposite direction. It is potentially a lower high at the moment. We're not really drawing all that much from it currently. But it is sort of an interesting setup or chart which is under construction. And this is also prior to or pre-earnings, which is scheduled for Thursday week. This is the 2nd of November, 2017. Also on top of that, if you look at the chart of Amazon, you ask yourself the question, what does this look like if we start taking out, a larger amount of time, 5.5 months? This is really looking like some form of consolidation, potentially a distribution pattern. What is most important is that we've got 2 touches at 1,000. We overshot it. We reversed very suddenly, very quickly. And now we've got 2 subsequent retests of this 1,000 pivot. And even on Wednesday, as the markets again were, moving or advancing, continuing their advance, Amazon put in a very prominent, very powerful reversal. This is another shooting star. It's sort of almost a one black crow. We've got a gap also between Wednesday and Thursday, then followed by another engulfing candlestick on Friday. And this is all pre-earnings, which is scheduled for this Thursday. So tech collectively is a little bit weak at the moment. And again, we're very close to that laser focused target at 6,648, where I'm starting to see again, potentially something a little bit larger on the cards, potentially to form. Again, this is a pretty big what if at the moment, but it's something that should be brought to your attention. Again, you can see Tesla's holding around this macro support, but again, earnings this week. So sort of, I guess to round out this video, in our top 12 list on the left-hand side of my screen, we've obviously just gone through the analysis. That's up on the website at the moment, but the majority of those companies in our list are reporting earnings this week, and when they do that, we choose not to trade. So instead of trading them, it's very much so very nicely sort of aligned with this sort of overextended environment which we see the actual broader markets in at the moment. So in a way, it's a blessing. It's a blessing because we're forced not to trade. I mean, whenever we have earnings, we don't want to hold option contracts, either bullish or bearish, over earnings. So again, it's sort of a hindrance for us to not trade, but at the same time, it's a blessing because really at this particular point, you shouldn't be looking to take advantage of this bullish trend. The advantage or the actual trades should have been placed in the month of September as we did. And now's the time again to be harvesting those profits and to be letting the markets pretty much finish this end of this rally, pretty much this blow off top, which we're currently underway, especially on that of the industrial average. Before we get stuck in a little sideways stagnant market environment, I'd be surprised right now to see the Dow above 23,328 in 2 weeks' time. And I mean, I'll say that right now. But that's sort of the market that we're looking at, the market environment that's starting to shift and the natural ebbs and flows of the markets. They don't continue like this forever. It's not indefinite. They have to sort of at least digest some of the gains or partial amounts of the gains that have just been, made very healthy, which are looking quite good. And we have to wait for a lot of these parameters or the oscillators themselves to reset to let these exponential moving averages catch back up to the market indices, let alone individual companies, before we see that next, I guess, impetus or the buying pressure, the really sustained buying pressure to come back up and either hold the markets and push them up higher or to see them move into sort of a longer consolidation, which would be a longer sideways move. So I just wanted to share that with you. If you have any questions, email me, success@pivotpoint-trading.com. Outside of that, everyone, enjoy your weekend, and I'll be back with you next week for some more market updates. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.